What's up, everybody? How are you doing? It's Big Cheds. Big Cheds. I am here, and I'm recording another free video. This is going to be the continuation of the free version of my third book, Trading Quotes. It's available on Amazon right now. That's going into the playlist for Trading Quotes, a daily dose of trading wisdom. It's my third book. I've done weeks up through week 8, and I'm going to do weeks 9 and 10 today. My intention is to put the entire book for free on this channel on YouTube at Ched's Trading. That's because my new book is out. The Trading Journal. The Trading Journal is also available on Amazon. The reviews are in. People are enjoying the book. Why you should use a trading journal, how to fill it out, sample trading ideas, how to know when those trading ideas fail, and how to learn and grow as a trader. It's a really important book, a really important project, and I'm super proud of it. So that's my fourth book. The rest of my stuff, of course, is available on Amazon and for free on my YouTube channel. I've got a free version of Trading Wisdom, and the entire cancer memoir is free, of course. I am Big Cheds on Twitter. I'm also now on Blue Sky, if you want to check that out. I'm not sure how long I'll be in there, but I'm just checking it out. I'm at Ched's Trading there on Blue Sky. As of course, I am a founding analyst at Bitcoin Live, where I do a twice a week full market report. I look at the entire market. And that's every Wednesday and Sunday night, no matter what, for the last 6 years. And it's with the best team in the world that studies crypto. So consider checking out Bitcoin Live. If you're looking for an exchange to trade, check out BingX. That is my favorite exchange. You can see link in the description. And of course, I appreciate your feedback, folks. I really appreciate you. Check out the rest of my stuff. Check out the masterclass tutorial playlist. I do live stream quick market updates twice a week, every Tuesday and Friday morning. I'm going to do another one tomorrow, so make sure you check those out and try to come by. Try to come by to one of my streams and let me know what you're thinking, how you are feeling, and all that jazz. But let's jump right into it, folks. Week 9 and week 10. Again, I really want to get my stuff out there for free. I want to continue to grow and learn, and I get better by teaching you. And I also really enjoy, people helped me out when I was getting started. So I enjoy helping others out and getting my content out there. So let's get it going here. So week 9 of Trading Quotes. Monday, if you just had a big loss, walk away. Trying to make it back in the next trade is a recipe for doubling your losses. So what does that mean? If you just had a big loss, you're emotionally encumbered, you're emotionally overwhelmed, and what's going to be first and foremost on your mind is, I need to erase the taste, I need to erase the memory of that loss, right? And you're going to force it. You're going to force it with the next trade. You're going to try to do maybe even in a larger position size than your last trade. And what's going to happen is, rather than making it back, you're going to double your losses. You're going to continue down a path, most likely because you're emotionally compromised. You're making bad decisions, and you're on tilt. Just like poker, you're on tilt. You need to take a break. You need to walk away rather than doubling your losses. Tuesday, in trading, the minute you let your guard down is when the capital destruction begins. Stay vigilant and protect your funds. So what does that mean to let your guard down? Well, especially if you've been on a hot streak, especially if you're doing really well, you might be tempted to forego some of your normal risk management practices, some of your normal, risk management techniques. You might say, well, I'm doing so well, I don't need to check the chart, or I'm doing so well, I don't need to double check, the order before I enter it. You might make a mistake, and you might let your guard down because you're feeling confident, you're feeling cocky. But when you let your guard down, it's when you start to destroy your capital. You start to lose money in trade. You start to make mistakes. You need to stay vigilant. You need to protect your funds. You need to guard your funds and respect your money. So don't let your guard down, because the minute you do is when the capital destruction begins. Wednesday, week 9. If you are a bull, then pullbacks are your best friend. The more we digest, the higher we go. Now, what does this mean? Now, this isn't pullback in the classical charting sense, which is actually A retest of support from below, like a broken support retest, is technically called a pullback. But most people think of a pullback as, you go up to 150 and then you come back to 120. You pull back to 120. And this is the context which I'm referring to. And if you're a bull, it's your best friend because you need to digest. You need to reset things. You think about the RSI. The RSI puts in lower lows. The RSI cools off while the price holds off gains, or it mildly, only gives off a little bit. You've reset things. You've consolidated. Pullbacks are consolidation. You need to digest the prior move. You need to shake out the short-term profit takers and rebalance that supply and demand. And the more you digest, the higher you go. And if you think about, for example, like even recently with Bitcoin, and you think about Bitcoin digesting all the way back to the weekly MA50, allowing a new leg up, all the way back to the MA50, allowing a push to highs. So these consolidations in uptrends can create an opportunity. And if you continue to rise without digestion, without consolidation, the price is going to have a massive crash. So if you're a bull, then pullbacks are your best friend. They give you opportunities to take a new long entry on a throwback or a bullish retest of support. Consolidation is good. Thursday, one decent trade can make up for 10 failed ones if you properly manage your risk. You don't need home runs in this game. Singles, stolen bases, and sac flies are good enough. And this is an analogy with baseball, right? American baseball, where there's a small ball style of baseball where you just try to get single hits. You just try to take one base at a time, sac fly, move the runner, one base, get a single. You're not swinging for home runs. People who hit the most home runs often have the most strikeouts as well because they're swinging for it. And so one decent trade properly managed with a good trade idea, risk managed, trade idea clearly defined, that decent trade can make up for 10 other failed ones if you do it right. If you get into you wait for a good entry, move your stop loss and profit, and you catch the trend at the right time, you can have a nice little trade here, and that can make up for those big losses. So think about grinding it out. Think about trying to score a series of small wins, small to medium wins, rather than knockout punches, and you're going to do just fine. Friday, and this is important, this is critically important, the residue of any failed trade is a lesson yet to be learned. And that's why the trading journal, of course, is so important. The trading journal over here somewhere, the trading journal is so important. It's if you continue to lose money in your trades and you're not stopping and looking at what happened, right? The residue. What does that mean, the residue of a failed trade? It means what's left over, the lesson left to be learned. Oh, I should have done this, or I missed this clue, or I wasn't paying attention. That's why you stop and you think, you analyze your trades. There's something there for you. That's the value that's left, that residue, right? You may have lost money, but you've paid for a lesson, right? You paid for a lesson with the trade. Take the lesson. Take what's there. Take that residue and try to learn that lesson. Saturday, trade with your instinct, not your head. Getting too theoretical will dull your senses. And so this plays into the concept of muscle memory. I talk about it a lot on Bitcoin Live. I talk about it on my YouTube streams. Now, you want to build up muscle memory, which means you want to look at a chart and know that chart. Remember, again, you're trading from a small watch list, a curated watch list, 10 or 15 plays. You know these plays. You know their price versus major moving averages. You know their price versus major price structure. And so you can contextualize volatility. You can put into context volatile or wild price moves. And you understand what it means when price approaches support, how fast it gets there, the texture of the consolidation, the candle body sizes in relation to one another, the wicks, all of that. You get the muscle memory by studying hard and trading from your watch list. And that's your instinct, that's your gut, that's your feeling. It's, and one of my quotes is, something along the lines, if you look at a chart and you don't have a strong feeling right away, then move on and play something else. You want to have a feeling. Like if you're not sure, then it's not there. The best trading opportunities will jump up and hit you in the face, which is another quote I'll get to in this series. So you want to trade with your instinct. You get too theoretical, not with your head. Oh, there's this triple stochastics RSI thing, and there's this Fibonacci, trying to use too many indicators, adding too many things, and getting too analytical. You have to build up confidence. You have to build up muscle memory, instinct. And if you get too theoretical, it's going to dull your senses. You want to focus on cultivating your senses, cultivating your instinct, cultivating your read or your feel of the chart. Okay? Sunday, week 9. 99% of proper trading is waiting for a move to fade. What does that mean, a move to fade? Well, it's the idea that if I want to go long in something, right? If I want to go long, I want an uptrend that's dipped, right? I don't want to go long in something that's been rising without any pullback because it's probably overextended and I'm going to get myself in trouble. If you wait for the price to come back to a well-defined level, you're buying a dip in an uptrend. You're buying a move against the trend, right? So it's the same concept. If you want to short something, okay, you want a downtrend that just bounced. That's the move, right? That's the move that you're fading. You're waiting for a move to fade. You want to fade, which means fading means to kind of go against that immediate short-term move, right? So a downtrend that just bounced and is testing resistance is a wonderful short opportunity. That's your move to fade. A strong uptrend that just had a pullback or a retracement and it's dropping back to support, that's a great spot for a long. You're fading that dip because most of the time the trend will continue. Trends tend to continue, right? And there's signs, you can look for signs of weakening and strengthening trend. That's what we use technical analysis for. And I go over that, of course, in the masterclass webinar. Make sure you've watched the masterclass webinar over and over again. There's several of them. It's very important. I made that for you folks. Week 10. Monday. The closer your entry is to invalidation, the easier it is to bail if things go wrong. Be precise when you open a position because letting go is not easy, right? It's really easy to buy. It's hard to sell, right? It's hard to let go of a position, especially if it's red. You don't want to take a loss. It's hard to let go and you end up bag holding. And the whole idea here is invalidation. The closer your entry is to invalidation. And what does that mean? Well, the idea is invalidation, right? So let's say you have a trading level. Here's your level. We'll call it 100. Again, just for, simplistic purposes. So the price comes here, breaks out. Now you're playing a throwback. Rather than buying here at like 107, you buy around 102, 101, 100. Your invalidation would be failure to hold this level, maybe 98, somewhere close by. So the idea is you want to buy close enough to your stop loss. Your stop loss is when your trade thesis, your trade idea becomes invalid, right? So the closer you are to your invalidation level when you buy, the easier it is to let go. It's a smaller loss. Your trading idea is defined. If you buy in the middle of the channel, right, it's a lot harder. You want to wait. It's a concept of price interaction with key level. Allows you to structure your risk, to define your risk in a reasonable way. Where in this case, and this is just a very general simplified example, but price interaction here would be with a key level. Take a long here, you take a short if it loses it. You're structuring a trade idea based on a key level. So the closer your entry is to invalidation, the easier it is to bail or to let go if things go wrong. It's really hard. It honestly is really hard to let go, right? And I know this from experience. Tuesday, stop trying to predict what's going to happen next and just observe the price action. You just might learn something, right? Stop trying to predict what's going to happen next and just watch, right? You can convince yourself with an Elliott wave. You can convince yourself with some kind of a divergence. You know what you think is going to happen. You know what's happening next. Maybe, right? But if it's an uptrend and it's holding support, it's still an uptrend. If it loses support, then you can act on that. But don't anticipate. Don't spend so much time predicting what's going to happen. Step back, observe, let the price give you clues. Remember, the price is factoring in everything. The price is factoring in the news. If the news matters, we're seeing it in the chart. So you might learn something, but because if you convince, like with price targets, if you convince yourself that a price target's going to be hit, you might ignore information along the way, right? Because you're convinced something's going to happen. You want to be more open-minded, more objective, and just observe. You're going to learn something. Wednesday, I love this quote, and it's actually on the cover. This is on the cover of the book, I believe. This is on the cover of the Trading Quotes book. Here we go. If you're in a rush to trade, right? This is one of my favorite quotes. If you're in a rush to trade, don't be surprised if your money is in a rush to go somewhere else. You were itching to trade. You wanted some action. You couldn't wait. You didn't want to wait for price interaction with a key level. You didn't want to wait for a good setup. You just wanted some. You just jump right in. Well, guess what? You were impulsive. You didn't define your risk. You didn't clearly structure your trade idea. Now your money's rushing over to somebody else who was patient. Somebody more patient, more methodical, who was not in a rush. And again, back to respecting your money. You need to respect your money and do not be in a rush to trade. Okay? Be more patient, be more methodical. Thursday, you should never be so impressionable that by simply seeing a tweet or a chat room message, you're encouraged to risk your funds. All trades should be planned out well ahead of time, right? It's the whole, I have a few quotes kind of on this subject, right? You should be a rock, not a blade of grass blowing in the wind. Don't be so impressionable that it doesn't matter how good you think the person is, even me. It doesn't matter how good you think I am. If I put something out, don't just, I'm going to automatically open a trade. You should be opening trades based on your methodology, your system, your watch list. And you should be planning out ahead of time, marking out key levels on those charts. And when the price gets to a key level, and again, you have price interaction with the key level, then you can strike. Then you go for it. Okay. So you want to wait for price interaction with the key level. Rather than just jumping in. You don't want to be so impressionable. There's just a simple tweak because people, especially when they're excited and the price has already been rising so much, it's really easy to get FOMO. And you really don't want to be that way. You don't want to be impressionable. You just want to wait for a good opportunity. Friday, one of the most effective ways to lose money is to be a reactive trader. Not proactive, but reactive. The price drops and now you're panicking. The price drops and now you're selling rather than selling when you should have when the price lost support. You're reacting to moves rather than being prepared and ready for them, right? Again, you're studying the chart ahead of time. You're studying, the price levels. You know what to expect or you know what to do if and when the price reaches certain levels, and then you can act upon that. But rather than being reactive, it's going up, I'm excited, it's going down, I'm sad. Don't be so reactive, don't be so emotional. That's a great way, a very effective way to lose your money. Saturday, I love this quote. Your opinions should only be as strong as your ability to change them when new information arises, right? You can be convinced of something, and you can be as convinced as you want, but the strength of that conviction should be equal to the strength of your ability to move on from the idea if you get new information, because the market will filter out the news, the market will filter out everything outside of the chart. You should have really strong opinions. There's a lot of quotes like this, strong opinions weakly held. You can have a strong opinion, but you need to be able to throw that opinion in the trash can and move on when you get new information. That is critically important. Be flexible, be adaptive, and be able to change your strong opinion when you get new information. Sunday, the market has an uncanny way of wearing you down and making you give up just before the ultimate move is unveiled. What does this mean? This happens a lot in consolidation ranges. If we think about recently, even the consolidation on Bitcoin, if we can think about the consolidation on Bitcoin, let's go to the weekly time frame. Let's see, what do we want to talk about? Even this consolidation here. Chopping around, trying to break out, lost support, regained it, lost support, regained it. The market's going to wear you down, especially while it's consolidating. It's chopping around, you get volatility, and that's why often even, I say many people have said the best moves come after both sides have been liquidated. So the market will wear you down. It will stop you out of your position before it finally resolves the consolidation and makes a move, which is why you want to avoid the chop. You want to avoid playing in the middle of the channel. You want to stay patient and disciplined. And again, price interaction with key levels. Very important. This is weeks 9 and 10. I'm glad I'm doing this. I want to try to get this entire book out for free. This is going to go into the Trading Quotes, a daily dose of trading wisdom playlist. I hope you're enjoying this series so far. Let me know what you're thinking, if you are enjoying it, if maybe you have the book. And thank you if you do. My new book is out, The Trading Journal. This teaches you how to fill out a trading journal, why you need to use a trading journal, sample trading journal entries, sample trading ideas, how to know when those trading ideas fail. It's a wonderful project. I'm incredibly proud of it. And because I have a new book out, I'm making my last book free. And that's what I like to do. I like to put out as much free content as possible. I do live stream here on YouTube as well. Every Tuesday and Friday, I may skip here and there when things are going on, but I do never skip at Bitcoin Live, where I'm a founding analyst with the best team in the world that studies crypto. I've been doing this for 7 years. And for more than 6 years, I haven't missed an update every Wednesday and Sunday night. I like to sit down and look at the entire crypto market in detail and answer, questions and do chart requests for the members. I'm really proud of the work we do. So I would suggest you consider checking that out. I'm, of course, Big Cheds on Twitter. You can find me on Twitter. I'm quite active there. I just checked out Blue Sky. We'll see if I'm still on it, but I'm just checking it out to see if there's any interesting crypto there. I'm trying to expand a little bit. If you're looking for somewhere to trade and exchange, I can recommend BingX. That is my favorite exchange. You can see the link in the description for the video. But, I really just want you folks to enjoy what I'm putting out here for you for free on YouTube. I really enjoy giving back. Like I said, when I was getting started, people were helping me out. So I'm trying to continue that, and I'm trying to continue and grow as a trader myself. So, folks, thank you. Thank you for listening. Leave me a comment. Let me know what you think. And I'll be back soon. I'll be back tomorrow, actually. I'm streaming tomorrow morning. So hopefully I will see you then. All right, folks, we'll finish it off here with the Church of Eight Wheels. And thank you again. Take care, everybody. Thank you again. Appreciate it. Big Cheds out.